Hello friends, welcome to this 7th lecture on the topic of admission of partner. In this series this is the 7th lecture, and in practice problems I am going to solve the third problem. Previous two problems were full length problems. These may not be asked in examination. They were covering journal as well as ledger and a balance sheet. But take the case of this problem, whatever is asked only that much portion I am going to solve. Whatever is not asked I am not going to solve. Okay, so let us quickly go for checking our third question. Simple question. These are the earlier questions which we had already solved. Second question is also there. It took a good amount of time, I think 1 hour 14 minutes it was. Now this is today's question, third question. Let me disappear from the screen. Okay, Anand and Rohit are partners sharing profits and losses in the ratio of 4:1. Their balance sheet as on 31st March 2018 was as follows. Balance sheet as on 31st March 2018, capital Anand Rohit, reserve fund. In the previous problem there was general reserve. In this problem it is reserve fund. It should be transferred to old partners capital account in their old profit sharing ratio. Next is creditors and bills payable. On the asset side we already have goodwill. This is important. We already have goodwill here. And then there are equipments, stock, debtors and cash. They agreed to admit Nachiket on the following terms. The goodwill is to be written off after admission of Nachiket. Okay. 1/4 of the equipments to be written off. Stock is undervalued by 10% and it is to be adjusted properly. Debtors of rupees 1,800 are not recoverable. Nachiket will introduce rupees 1,20,000 for 2/5 share of the firm. Anand withdrew rupees 60,000 from business. Prepare revaluation account and pass journal entries of goodwill. Now this is very important. What have they asked? They have not asked to prepare all the ledger accounts. They have asked us to prepare only revaluation account, and they have not asked us to pass all the journal entries, but they have asked us to pass the journal entry only for goodwill. And the adjustment of goodwill says goodwill is to be written off after admission of Nachiket. Okay, so these are the two different things which are required to be prepared. Now as promised, I am not going to solve whatever is not asked. I am going to solve only what is asked. So we are going to prepare a revaluation account and we are going to pass the journal entries for goodwill. They have told you goodwill is to be written off after admission of Nachiket. Now this is important thing, after admission of Nachiket. In the government textbook they have written it off only against old partners, that is Anand and Rohit. Whereas it is clearly told that goodwill is to be written off after admission of Nachiket. So one may argue that, sir, we will write it off to all the three partners, that is to Anand as well as Rohit as well as Nachiket. Because the wording is after admission of Nachiket, not before admission of Nachiket. So some authors or some professors may specify that it is better to write it off against Nachiket capital also. Not only against the capital of Anand and Rohit, but also against the capital of Nachiket. On the other hand, some authors, some professors may argue that it is at the time of admission, just like we are revaluing equipments or we are revaluing stock or maybe we are revaluing debtors. Similarly, we are going to revalue goodwill. Revaluation profit or loss is always transferred to the old partners. Therefore, goodwill written off is also to be transferred only to old partners. Nothing else is required to be done. So these are the two different opinions. Government textbook is following the opinion that goodwill written off should be considered only against old partners. That means goodwill written off is to be treated just like an adjustment of revaluation. So government textbook is probably ignoring the word after admission of Nachiket. It is considering the word at the time of admission. All these different things are taking place. They agreed to admit Nachiket on the following terms. So we are considering just like revaluation of other assets, goodwill is also revalued and the new value of goodwill is 0. That is what is the treatment which is done by or which is given by government textbook. So I am going to consider government textbook method for the purpose of this particular problem. Okay. So draw these two different accounts. First account is in the books of partnership, revaluation account, and second is we are also going to pass journal entry. So draw the format of journal. Only one entry is required to be passed. So you can draw a small format of journal. Revaluation account 6 to 8 lines and journal 4 to 5 lines. More than sufficient. That is not a problem. Okay. No other ratios etc. are required to be calculated because we are specifying Goodwill is written off against old partner's capital only. Let me write down this observation. Observations. Old partners PSR is 4:1. Nachiket is admitted for 2/5 share. He brings in capital of rupees. How much is bringing in? 1,20,000. He brings in capital of rupees 1,20,000. He does not bring in any goodwill. Next, balance sheet already has goodwill which is expected to be written off. The adjustment says write off goodwill after admission of Nachiket. It means two different treatments are possible. What are the two different treatments? Goodwill is written off against old partners only in old ratio, or second one, goodwill is written off against all partners, that is after admission of Nachiket, in new ratio. Okay, now government textbook has considered the first treatment. They have not considered second treatment. So I am following, or I am first of all solving the problem by government textbook logic, ignoring the point of, or ignoring the word after admission of Nachiket. I am ignoring the word after. I am just considering it is to be written off against old partners in old ratio. Based on that, we have drawn these two different accounts. First one, revaluation account. Second one is the journal, not an account. It's a journal in the books of partnership firm. So you may write in the books of partnership firm, or you may also write in the books of Anand, Rohit and Nachiket. Both the things are okay. Okay. First one, the goodwill is to be written off after admission of Nachiket. That means the entry required to be passed is, we are considering first treatment. So I am writing it here. Assuming first treatment as per government textbook. Okay, assuming first treatment, FIRST, as per government textbook. The entry will be, it is required to be written off against old partners. Old partners capital account will be debited, and asset is written off. Asset written off is a loss. Loss is to be debited either to the P&L account, and P&L account ultimately goes to partners capital. So loss is to be debited to partners capital account. Who are the partners? Old partners are Anand and Rohit, and their old ratio is 4:1. So I'll specify entry will be Anand's capital account debit, Rohit's capital account debit, to goodwill account. And they have told us the amount of goodwill from the existing balance sheet is rupees 90,000. So we are going to consider 90,000, and it is to be written off to Anand and Rohit in which ratio? In their old ratio, old ratio was 4:1. That means 4 pieces to Anand and 1 piece to Rohit. That goes to 5 pieces in total. So 90,000 is the amount of goodwill which we are already having. Please make the working in your notebook on the rough page. 90,000 to be divided by 5, that goes to 18,000. So 18,000 is the piece or is the amount to be transferred to Rohit, and for Anand it will be multiplied by 4, that goes to 72,000. So 72,000 is the debit for Anand and 18,000 is the debit for Rohit. 72,000 and 18,000 being existing goodwill written off. Being existing goodwill written off 90,000. Okay, so the first adjustment is over. Next one, 1/4 of the equipment to be written off. Equipment's amount is rupees 45,000. It is to be written off. If it is required to be written off, that means it is required to be reduced. Asset reduced is a loss. Loss should be debited to revaluation account. So revaluation account debit side to equipments. Revaluation account debit side to equipments. And amount is how much? 1/4. 1/4 of what? 45,000. So let us calculate what is the amount. It is 45,000. 45,000 divided by 4. That goes to how much? 11,250. 45,000 divided by 4, because they have specified 1/4. That means it will be 11,250. Okay, so that is a loss. Asset going out, sorry, asset getting reduced is a loss. It will have to be debited to revaluation account, because revaluation account is a nominal account, debit all expenses and losses. So revaluation account is debited. Okay, next one. Next adjustment is stock is undervalued by 10% and it is to be adjusted properly. Now this is a tricky adjustment. I want you to understand it properly. Listen here. What have they specified? Just a minute. Okay. Yeah. What have they specified? Stock is undervalued by 10%. आत्ताचा जो स्टॉक दिसतो आहे 54,000 तो ऑलरेडी अंडरव्हॅल्यू झालेला स्टॉक आहे. द वर्डिंग इज स्टॉक is undervalued ED. Stock is undervalued. That means it is not required to be undervalued by us, but it is already undervalued in the given balance sheet. So there is some amount of stock which is the correct amount of stock, but in the balance sheet correct amount is not appearing. Instead of that, the correct amount is undervalued by 10%, and after undervaluing it by 10%, then the remaining amount is given in the balance sheet. So given balance sheet is not the correct amount of stock. Given balance sheet does not contain correct amount of stock, but it contains that amount of stock which is already undervalued. Since it is already undervalued, it is already below where it should be. Undervalued, under means below. It is already below where it should be, than where it should be. So we are going to bring it up for the purpose of adjusting it properly. So what have they told you? Stock is to be undervalued is not the wording used. Please look at the wording or the sentence carefully. The wording is stock is undervalued. असं झालेलं आहे, असं करायचं आहे असं सांगत नाही आहेत. They are not telling you what is to be done, but they are telling you what is already done. And then they are telling you to rectify the mistake. So I'm repeating again, here they are not telling you what is to be done by you, but they are telling you what is already done by them. And we are required to identify if they have done this particular thing, whether it is correct or it is wrong. If it is correct, we will continue. If it is wrong, we'll rectify. And they have already told you that it should be adjusted properly. That means they are accepting that whatever they have done is incorrect. We need to correct it. We need to rectify it. And for the purpose of rectification, what should be done? Whatever has gone down, whatever has gone under, that will have to be brought up, that will have to be brought to normal level, that will have to be brought over. Whatever is under, that should be brought over. Whatever is down, that should be brought up. So they have already undervalued and we are going to bring it up. Now how to calculate this amount? Some students will say, okay sir, we have understood this. 54,000, 10% to be added because it is already undervalued, already reduce करके हो चुका है. अभी क्या करना पड़ेगा? ऐड करना पड़ेगा 54,000 का 10%, 5,400. That is one treatment which is going to be considered by many students, which is partially correct because they are considering that the adjustment is of addition, but the amount is wrong because they are considering 54,000 into 10%. Please understand what is the situation. Let me come to the working. Just a minute. Let me shift it a little bit here. Yeah. So we are having good space for the purpose of writing. Good. Let me take this column here. Yes. What I'm doing is I'm preparing a working note. Okay. Working note number 1, calculation of stock. Working note number 1, calculation of stock. Particulars and amount. Okay. Particulars and amount, and let me insert some extra rows here. There is proper value. I'll add one more column here. Percentage. Okay. So proper value, if it is 100, then we have done a mistake that it is already undervalued, and it is undervalued by 10%. That's what they have told. So stock is undervalued by 10%. 10% means 10 per century. So if the proper value is completing its century, then undervalue is completing 10 runs. So the book value or the balance sheet value is 90. I hope everybody has understood this concept. And we already know book value is how much? Book value is, look at the problem, stock book value is 54,000. So now you tell me, where should I write 54,000? In front of 100 or in front of 10 or in front of 90? Think about it. 54,000 is coming from balance sheet. Balance sheet is coming from books. That means 54,000 is the book value. So this 54,000 should come in front of 90. Undervalue amount is not known to us. Therefore proper value amount is not known to us, which is required to be calculated by us. So now the table is ready. I hope you can understand how to calculate this particular thing. It is simple cross multiplication. If 90 is equal to 54,000, then 10 is equal to how much and 100 is equal to how much? So that is equal to 54,000 into 10 upon 90 and 54,000 into 100 upon 90. Okay, so I can specify here. Let me write down. Merge, and then this one also is to be merged. So undervalue is equal to 54,000 into 10 upon 90 is equal to how much? 54,000 into 10 upon 90. Yes, calculate it quickly. Is equal to 6,000. Very good. And proper value is equal to 54,000 into 100 upon 90. That goes to how much? Obviously 60,000. So in the balance sheet, the stock should be brought up from 54,000 to 60,000 because 54,000 is already undervalued. Stock is already undervalued and it is to be adjusted properly. That means it should be brought up to its proper value. So we are going to take it from 54,000 and bring it up to 60,000. That means the undervalue or revaluation adjustment should be of rupees 6,000. So please tell me, what is the amount of entry of revaluation? 54,000 or 6,000 or 60,000? Yes, think about it. Okay, I am giving you 1 minute. book value is the starting point, proper value is the ending point. So the entry should be of the difference between the starting point and ending point. That means the entry should be of rupees 6,000. Very good. If your answer is 6,000, that means you are correct. So 6,000 is increase in the amount of stock. Stock is an asset. Asset is increasing. Asset increasing is a profit. Profit should be credited to nominal account. Revaluation account is a nominal account where we are going to credit it. We are going to call it as buy stock. Into bracket we are going to say working note number 1. And the amount is rupees 6,000. So opening balance is already there of rupees 54,000, and after passing the entry of rupees 6,000, 54 will become 60. Is it clear to all of you? I hope everybody has understood it. Please look into the sentence very carefully. Sentence says stock is undervalued by 10%. What has happened? It is already undervalued, and now what should be done? It is to be adjusted properly. So there is a proper value which is already undervalued. We have got a book value which is 90. 90 means 54,000 because that is the book value. So what is the undervalue which is to be reversed? It is 6,000. And ultimately after reversing that, what is the value we are going to achieve at? We are going to get the value of rupees 60,000. I hope everybody has understood the concept. Let me go to the next one now. Debtors of rupees 1,800 are not recoverable. Debtors of rupees 1,800 are not recoverable. That means it is bad debt. Bad debt is a loss. Debit all expenses and losses. So we'll write it here to bad debts. And the amount is rupees how much? They have told us 1,800. 1800 Very good. Now since balance sheet is not prepared, we cannot show the second effect. Nachiket will introduce rupees 1,20,000 for 2/5 share of the firm. Nachiket will introduce 1,20,000 for 2/5 share of the firm. That means the entry will be cash is coming in. Nachiket is the giver. Entry will be cash or bank account debit to Nachiket capital account 1,20,000. But we have not prepared cash or bank account. We have not prepared Nachiket capital account, and in the journal also they have asked us to pass the journal entry only for goodwill, not for anything else. So neither we can show cash account, nor we can show Nachiket capital account, nor we can show journal entry. So this adjustment is ignored by us because they have asked us to prepare only revaluation and journal entries. Next, Anand withdrew rupees 60,000 from business. Anand is withdrawing the money. So entry will be Anand is the receiver, cash is going out. Entry will be Anand's capital account debit to cash or bank account. Anand's capital debit side and cash or bank account credit side. Neither we have prepared Anand's capital account nor we have prepared cash or bank account, so we cannot show the posting. And journal entry is also only for the adjustment of goodwill, so we cannot show the entry for Anand withdrawing 60,000 also. So no effect. I think all adjustments are over. So now what we can do is we can close revaluation account, find out profit or loss, and transfer it to old partners in their old PSR. Okay, so let us take the total. 11,250 is on debit side plus 1,800 is on debit side. 11,250 plus 1,800, that means the total of debit side is 13,050. Please make your own totaling. Do not depend upon me. The more you will calculate, there is a greater chance that you will have more command over the problem in the examination hall. So the balancing figure is 7050. This balancing figure of 7050 should be transferred to whom? It should be transferred to the old partners. There is no alternative treatment possible. Revaluation loss is always to be transferred to old partners only. So old partners are Anand and Rohit. By partners capital account, and Anand and Rohit, I am going to consider which ratio? I am going to consider their old ratio. And what is the old ratio? If you remember it properly, it was 4:1. Okay, if you want we can just check it here. First line it is mentioned Anand and Rohit sharing profits and losses in the ratio of 4:1. So I'll write it here, Anand into bracket 4, Rohit into bracket 1. And let us divide the amount now. 7050 divided by 5, that comes to 1410. 1410 is to be given to Mr. Rohit, and into 4, that means 5,640 to be given to Anand. Now I have already told you many number of times earlier also, all amount columns are right aligned, so I am considering right aligned. So here we complete the problem. That's the only thing which is asked. They have not asked us to prepare balance sheet. They have not asked us to prepare other ledger accounts. Nothing else is asked. So जितना पूछा है उतना कर दिया, प्रॉब्लम ओवर. एग्जाम मध्ये असा प्रॉब्लेम येऊ शकतो का? येस. इफ यू आर लकी इट मे हॅपन और नो, डिपेंड्स अपॉन युअर लक. Okay, now those of you who are happy with this particular solution, the problem is over for you. You can stop this video here itself. But those of you who are interested in considering the second alternative, this alternative which is mentioned here, goodwill is written off against all partners in new ratio. Why this alternative is considered, or why this alternative is possible? Because the first adjustment says goodwill is to be written off after. The most important word is after admission of Nachiket, and after admission of Nachiket, if any asset is written off, then it will have to be transferred to all the partners. That means it will have to be transferred to Anand and Rohit and Nachiket. That means our journal entry will be Anand's capital account debit, Rohit's capital account debit, Nachiket's capital account debit to goodwill account. If this entry is required to be passed, then we will require new ratio, and new ratio is not given by the problem. We'll have to calculate that new ratio. Is this second alternative required to be written in examination? No. Because the first alternative, goodwill is written off against old partners only in old ratio, is the alternative which is solved in government textbook, so that is to be written in examination. However, those of you who are interested in understanding how accountancy or legal terms or the agreements can be interpreted differently, for them the next part of the lecture is there. So those of you who are happy with this solution, no problem, you can stop the video and you can go for the next one for the purpose of next problem, question number 4. But those of you who are interested in understanding what is the legal implication of the word after, and accordingly what is the accounting treatment possible, please continue. Please remember, whatever I am going to discuss now is not to be written in examination, because government textbook has considered first alternative, first treatment. Government textbook has ignored the second treatment. Okay, so for exam purpose, my problem is over. This is an additional discussion for those students who are interested in studying accounts in a little bit better manner. Okay, so let me go away from the screen now and let me consider the same problem but in a different manner. That is, we are considering now the second treatment. Okay. Let me duplicate the slide. Remember, all the adjustments of revaluation will remain same. Revaluation profit or loss will always go to old partners only. There is no question of Nachiket getting the amount of revaluation profit or loss. Reason is, revaluation is always done before admission of new partner. I repeat, revaluation is always done before admission of new partner. Since revaluation is done before the admission of new partner cannot get the share of profit or loss of revaluation. In respect of goodwill, in this problem, since they have used the word write it off after admission of Nachiket, that's why we are considering only the change in the adjustment of goodwill. So there is no change in the adjustment of revaluation. There is no change in the adjustment of your stock account also. The only difference is Nachiket's capital account will also get debited. Okay, and the amount to be transferred to Anand and to Rohit will remain will change. Goodwill amount is 90,000, which will have to be transferred to all the partners in their new ratio. So we'll have to prepare working note number 2. Working note number 2, calculation of new ratio. No change in calculation of stock, no change in revaluation, because revaluation is always done before admission of new partner. So there is no question of Nachiket getting any share out of revaluation profit or revaluation loss. So there is no change in revaluation account. Only changes are for the adjustment of goodwill. Working note number 2, calculation of new ratio. Okay, now let me remove these things. Just a moment. I'm very happy that you are continuing with the video, because this is not a logic which is easy for many students to understand. It requires some brilliant minds to think about it, because we are now playing as a lawyer. We are saying that since you agreed, they agreed to admit Nachiket on the following terms. You have already mentioned that you have agreed. After admission of Nachiket, goodwill is to be written off after admission of Nachiket. It means we are going to consider Nachiket should also be transferred his share of goodwill. So his capital account will get debited. Okay, so I'm considering now. Yes, the second alternative. Okay, assuming second treatment. Not as per government textbook. So it's very clear now. I don't want anybody to get confused. Okay, second treatment not as per government textbook. Now they have told you that Mr. Nachiket is admitted for a particular share. What is the share he is admitted for? Look at the problem. Adjustment number 5. Nachiket will introduce rupees 1,20,000 for 2/5 share of the firm. So Nachiket's share is step number 1. I am writing short form. N's share is equal to 2/5. Next, step number 2. Remaining balance is equal to 1 minus 2/5 is equal to, so 1 minus 2/5, how are you going to do it? 5 into 1 will become 5. 5 minus 2 is equal to 3, so that becomes 3/5. Okay, step number 3. New ratio is equal to remaining balance into old ratio. Okay, so first one is Anand, second one is Rohit, and third one is Nachiket. Look into the ratio of Anand. Anand's old ratio was 4/5. Rohit's old ratio was 1/5. This 4/5 will have to be multiplied by the remaining balance. Remaining balance is 3/5. So 3/5 into 4/5, remaining balance into old ratio. Same is the case with this fellow, 3/5 into 1/5. So calculate the same. 3 into 4 is equal to 12, and 5 into 5 is equal to 25. So 12/25. 3 into 1 is equal to 3, and 5 into 5 is equal to 25. So 25 here, and then 12 pieces are given to A, 3 pieces are given to R. That means 15 pieces are already distributed out of the 25 pieces available. So out of 25, 15 pieces have gone, 10 pieces are remaining. So N is equal to 10 upon 25, and 10 upon 25 can also be considered as 2/5, because 10 upon 25, if numerator and denominator both are divided by 5, then you get 2 upon 5. So we are working the things properly. So new ratio is 12:3:10. Therefore new ratio is 12:3:10. So I can specify this will have to be 12/25, then 3/25, and lastly 10/25. Okay, so let us calculate the amount now. 90,000 rupees are to be distributed. I repeat, 90,000 rupees are to be distributed by making 25 pieces first. So 90,000 divided by 25, make a rough working, that comes to 3,600. This 3,600 is to be multiplied by 12. 3,600 into 12 is equal to 43,200. Then 3,600 into 3, that is 10,800, and 3,600 into 10, that is equal to 36,000. If you want, you can cross check. 36,000 plus 10,800 plus 43,200, it comes to 90,000. So that's correct, being existing goodwill written off after admission of Nachiket in new ratio. Okay, after admission of Nachiket in new ratio. If you are going to stick to the sentence of the problem, what was the sentence? sentence was goodwill is to be written off after admission. After admission. If it is after admission, then Nachiket should also be considered. In that case, you cannot use old ratio because Nachiket is not there in old ratio. You must consider only the new ratio. Then you'll have to calculate new ratio and do the working. Sir, I have understood both the treatments. What should I do in examination? In examination, we are going to solve as per government textbook. Then why did I teach you the additional thing? It is for the purpose of understanding how legal points can be raised and how the treatment will change depending upon the sentences which are used, if we are going to stick to the meaning of the word which is used in the sentence. Okay. Sir, this is a dangerous thing because Nachiket capital account will get debited. That means Nachiket capital account will go down. He has brought in 1,20,000 rupees capital and now his capital account is getting debited by rupees 36,000. It means his capital account will fall down, go down, his closing balance will be reduced. Yes, what you are saying is true. So sir, this is a dangerous treatment. Yes, it's a dangerous treatment. Should it be done? Yes, it may be done. When it is to be done? Not today. This is only third problem. As we are going to go ahead in the discussion of the topic of admission, we are going to learn this treatment also. This is a very important treatment. But in this problem, government textbook has clearly considered that we are going to ignore the word after admission of Nachiket, and they have treated it just like a normal revaluation situation. Revaluation profit is always considered, or revaluation loss is always considered to be transferred to the old partners because revaluation happens before admission of new partner. So they are considering adjustment of goodwill is also done before admission of Nachiket. So in the solution which is given in government textbook, they have ignored the word after admission of Nachiket, but that is okay. Don't worry, follow the treatment whatever is given in government textbook. Additional lecture is only for the purpose of helping you to understand how new treatments we are going to learn afterwards. Okay, so thank you very much. I'm very happy that you are continuing with your studies of admission of a partner. In the next lecture, I'm going to consider one more problem. So one problem, one lecture, that's what I'm going to do now. We are going to solve somewhere around 12 to 13 problems. So develop your stamina, keep your notebooks ready, keep your mind free, and use this open learning system for the purpose of understanding the topic of admission of a partner. Thank you very much. Bye bye.